Today, I'm going to share with you the most important things you need to know about oil. So, oil is our number one energy resource in the world and the United States. So, it's almost a third of the commercial energy for the world. It's over a third for the United States. But you can see it's a very small portion of electricity production. The places we use oil for electricity production tend to be island nations or backup power for grid reliability. It's not a big part of our electricity system. Oil is really used in our transportation system. So this is just looking at the United States as an example to give you a sense that really our transportation systems are driven by oil. And there are a lot of different environmental impacts we could talk about with oil. One of them, of course, is it's responsible for about a third of the energy-related greenhouse gas emissions. So it is definitely a good big contributor to climate change. But there are other environmental impacts all along the extraction, the transportation, and the use system of our oil systems. In the world, oil is not evenly distributed. It is created from the squishing of marine microorganisms that doesn't come from dinosaurs. And so it is something that was produced hundreds of millions of years ago by squishing those marine microorganisms into a condensed hydrocarbon. And so it's located in very particular places around the world. So you can see here in the United States, we only have about 4% of the world's proved oil reserves. Much of the world's proved oil reserves are in what we call OPEC nations. OPEC nations are part of the Organization for Petroleum Exporting Countries, something you've probably heard of. It currently has 12 member countries with about 10 other countries that sometimes work together with OPEC. OPEC's goal and why they work together was really to coordinate oil production quotas in order to influence global supply and prices. That is why they're working together. A lot of these countries, as petroleum exporting countries, a lot of their economy or their government income is really dependent on oil prices and oil supply. So they are trying to manipulate the market for their country's benefit as part of this consortium. So I mentioned OPEC because, like we saw, 70% of the oil reserves are in OPEC. They're a major oil producer when you look at those countries together. So they're producing about 35% of the world's oil production and not using a lot of it. They're only consuming about 10%. They truly are more focused on the exporting part of oil. Something that has changed in the last decade or so in terms of the landscape and OPEC's influence on the market is the United States. With the horizontal drilling and hydraulic fracturing revolution, the United States has really become a major oil producer in the world, which has kind of reframed the market a little bit in terms of the global scale. The United States remains the number one oil consumer and has been the number one oil consumer in the world for a long time. And so you can see if we're talking about a global commodity like oil, the production, the consumption, this can have impacts on things like supply, demand, geopolitics, trade deficits, things like that. World oil production is increasing overall, so I'm showing you both production and consumption in order to meet the growing demand and consumption. Most of the consumption growth right now is really happening in Asia Pacific and places like China and India, but you can see places like Europe and the United States have long been big consumers of oil production, really growth in the US, but has long been a big part for the Middle East. So as a global commodity, we often keep an eye on, and especially since it's a big part of our transportation system, the price of oil. And there's a lot of things that impact price of oil, but just basic economics, it's supply and demand. So there's different things that impact supply, production, piracy, natural disasters, geopolitics, and then of course demand. It's also some of those things, natural disasters, accidents, recessions, pandemics, things like that. All of these contribute to this global price, and there's really some variation in oil price, but it is really truly a global commodity that is traded around the world. So if we look at a history of oil price, you can really see that the volatility of oil price really started in the 70s. I'm showing both real and nominal, so money of the day here, but if you really just look at money of the day, it was really, we had a steady oil price for a long time since we discovered oil and we started growing the use of oil. Once we started to really decline in terms of production in the United States, which was a major consumer in the 70s, we really started to see more fluctuation and impact from other events that are happening. And now we really have a pretty volatile oil price globally. And so just kind of zooming in on since the 70s, just give you a sense of all the different ways of the different geopolitical events or economic events, everything from the Arab oil embargo in the 70s to, financial collapse in 2008. All these kind of things impact either supply or demand and really impact oil price. The 70s and the Arab oil embargo really brought oil's importance onto the front and center in the United States and other countries, spurred a lot of different policies because it was really eye-opening for a lot of policymakers on how much oil price and oil supply really impacted economies. And so there's a lot of different efficiency and other policies around oil that really came into play in the 1970s. All right, so let's take a step back and talk about what is oil. So oil kind of lies between, as a fossil fuel, between natural gas and coal in terms of its complexity as a hydrocarbon. Natural gas is really simple. It's CH4, that's methane. Coal is this really complex solid that has all these other things in it. It's a very complicated hydrocarbon. Oil's in the middle. It's kind of longer chain hydrocarbons, but not all oil is the same. And so when we talk about oil, we talk about characteristics and terminology. There's kind of three big things that we do to label the oil. The first is its API gravity. So a high API gravity, it's light, it's sweeter, it flows better. A low API gravity is heavy. It's really thick. It doesn't flow well. You can think about it more like molasses or something that doesn't flow well. So we talk about it in terms of light or heavy. We also talk about it in sulfur content, whether it's sweet, so it has very low sulfur content, or sour, which has a high sulfur content. All of these things matter because it gives you an indication on how much stuff you're going to have to do to that crude oil in order to make it into the products we want. Because we want to make it into gasoline or diesel, that's going to be something that's lighter. We don't want sulfur in it. We're going to have to take the sulfur out. So if you have a low sour crude, that's going to be something that's cheaper because you're going to have to do a lot of processing to get it into the gasoline, the diesel, the jet fuels that we want as fuels from that. We also talk about oil from where it's from. So you might hear things like Brent or WTI, which is West Texas Intermediate. Those are labels that we use on the oil in terms of where it comes from. I've highlighted both Brent and WTI because those are also what we call our benchmark crudes. When we're talking about the price of oil, we're usually either referring to the price of Brent, which is in Europe, or the price of WTI, which is a US-based oil. That's what we're talking about when you hear this is the price of oil today. So we do trade it around the world. About half of the crude oil supply and about a quarter of the refined products, so that's like our gasoline and our diesel, is traded internationally. In this chart, I'm really just kind of giving you a sense of who is exporting it and where it's going. So obviously the Middle East is a major exporter, and you can see it's going to countries all over the world, a lot in Asia Pacific, some also in places like the United States and Europe. United States has really come on board as another major exporter, and you can see that a lot of the exports from the United States are going to Europe and other Asia Pacific countries. We look at this in terms of crude oil supply and demand because it is so important for our transportation systems and our economies, and so disruptions to this global trade can really impact oil price. We tend to move the crude oil around and we move the refined products less. So we're moving crude oil, the stuff that we get out of the ground, all over the world. We're moving it across oceans, things like that. We tend to move products like gasoline and diesel much shorter distances, much more locally to markets. So we're refining that oil close to markets. It is only recently that the United States has really become this net exporter of petroleum. So that's when we're talking about petroleum there, that's both crude oil and petroleum products that we're exporting. Many of the petroleum products are to our neighbors like Canada and Mexico that we're exporting it. Crude oil, again, we're exporting that around the world, but much of the crude oil we're producing, we also use within the United States for our own consumption purposes. So you can see how as our net export of crude oil has changed in the United States, the impact of production around the world has less of an impact on our supply. how we move it is also changed. So we move things in big tankers. We have very large tankers that we're moving crude oil in. And these tankers, some of them as big as the Empire State Building, very, very large. A lot of them are these, what we call dirty tankers. And the dirty tankers just have the crude oil. They're called that not because they're dirty, but because it's just the crude oil, it's unrefined. And it's in big holes, just a mix of different crude oils. And then the product tankers tend to be smaller, they're going less distance, and they have more compartments because you got to keep the gasoline, the diesel, the things separated from each other. One of the impacts of some of the oil spills that we have had related to tankers is a change in the actual design of oil tankers. So oil tankers used to be something called single hold, which just basically meant if the tanker ran into something, it would puncture a hole into the hull and you would leak all of the oil from the oil tanker because there wasn't a divider between the outside of the oil tanker and the compartment that was holding the oil. So the Exxon Valdez oil spill in the late 1980s was kind of a wake-up call that we really need to change the design of our oil tankers. We now require oil tankers in the United States to be double hulled. So you can't have these single hold oil tankers in the US any longer. And so we're continuing to expand the double hull construction of our oil tankers for that environmental reason. So we've seen global oil tanker spillage volume decline dramatically over time. You can see this is from the 70s to today, a very dramatic decline. So about 0.001% of the global oil transported and tankered is spilled, but it can still have a very significant impact locally when those oil spills do occur. When we're doing it over land, we tend to move oil by pipeline. That is the cheapest way to move oil around when you're doing it by land, much cheaper than by train or by tanker trucks, which are other ways that we move oil around. In the United States, we have a very extensive crude oil pipeline and petroleum product pipeline, so we're moving it a lot. In North America, by pipeline. And so you can see even domestic and foreign, when you have neighboring countries, you're going to move it by pipeline when you can. As I said, we move crude oil around. We tend to refine it near the markets that are going to use the products. And a lot of companies that we often associate as oil companies, a lot of them are refining only. So Marathon, Valero, Phillips 66, they're just doing the refining. They're buying crude oil off the market and they're producing the products that we want. Okay, that's all I was covering for today. If you want to know a little bit more or want to dig deeper, obviously check out our website or our newsletter.